Welcome on board Sandip Sabharwal as well and find out what he's making of the market. Sandeep, hi, good morning. Good to have you on the show. Some stability on the screen, at least when it comes to the US market handover on Friday and Asia as well, although we're all awaiting how China is going to open after that week-long break tomorrow. But do you think it'll be some time before stability kicks in? I mean, in the week gone by, we've already seen 40,500 crore rupees worth of FI inflows. Yes, DIIs are trying to match up and buy the market with 33,000 of inflows. But till this China-India trade gets balanced, or China versus other EMs, you think it's going to be some more time to go?
Yeah, I think it should take some more time simply because of the fact that China was so under-allocated vis-a-vis its allocation on the emerging market indices. So if you look at it on the emerging market indices, China and India almost similarly placed at around 20%. And China allocations were hardly, I think, going maybe 5%, not 20%, because of a lot of investor concerns around what was happening in China with regards to growth, etc. Secondly, on valuation, if you see Chinese market trades at around 11 times earning, which is way below Indian valuation as well as at a discount to emerging market valuation. So uh, when something just starts off from the bottom, then the moves tend to be very rapid, and that's what we've seen in the Chinese market. Now it's a question of catch up. Many investors have been caught by surprise, and many global funds, etc., will need to reallocate simply because of the fact they don't want to miss out on the performance of China. And I would think that we've seen around 5 billion flow out of India. Maybe another 5 to 10 billion could flow out before we reach a level where parity is restored, and then it will be back to normal trading.
So, Sandeep, anything that you've already bought in the week gone by, or at least keeping on our radar for whenever the market does decline further, you would be tempted to even add positions or look at some fresh buys?
Because it's a foreign investor-led sell-off, so we are seeing bigger sell-off on the large cap side. So I think as the sell-off continues, if it continues, we don't know whether it will continue or not. But my guess is, given a lot of the global geopolitical issues also, which are not being factored into the markets right now, but which could come into play if things deteriorate, combined with the reallocation and overall frothiness in global equity market, if the correction plays out, then I think on the large cap side, stocks like L&T, Reliance, ICICI Bank, I think as they correct more, they could come into good buy zones, and maybe some auto companies also, but they haven't fallen as much.
All right, let's get stock specific then, and just going by the kind of business updates that have kicked in for some of the banking counters. It's been a bit mixed. What have been your key readings, Sandeep, when it comes to the banking sector, the kind of deposit growth and loan book growth that we've seen?
And due to a nudge from the RBI, I think most of the financial institutions have focused on deposit growth. So deposit growth in general has been more than credit growth. Credit growth seems to be slowing down, and it also correlates with the data coming out from the economy that the economy seems to be also slowing down, and that is another additional issue for the markets to grapple with. The other data point which is coming out from financial is especially the MFIs, etc., is that at the bottom of the pyramid there seems to be stress because NPA levels have gone up there. So whether that also percolates higher into NBFC and bank unsecured loan books in terms of increased asset quality pressure or not, that's something we need to watch out in the results as they come out.
Okay. Meantime, let's also get in your take then as to what the outlook is when it comes to some of these consumer names, because the expectation is that we could see a recovery kicking in, we could see that rural recovery playing out, but then going by the kind of negative surprise, for instance, that a Dabur was meted out with, do you believe that it is going to be a fairly somber quarter when it comes to consumption and FMCG, and how are you looking to play that sector?
Yeah, so I think many of these stocks went up in the expectation of a revival of growth, as these companies had also indicated last quarter. But the recovery, it seems, is slower than what they expected. Now everything is on the festival season and how the demand plays out during the festival season. So I think that's something we need to watch out. But clearly, the overall growth pickup is not as great. So there are always outliers because like Titan did very well on jewelry sales because I think post the duty cut, there would have been a sudden upsurge in the demand because demand was subdued for 2-3 quarters. But now again, gold prices have moved up. So whether they can sustain this growth or not for this quarter will be something we need to see.
Yeah. And I guess, it's in sync with the overall slowdown as well, right? Sandeep, I mean, look at DMart's store sales growth, and this is a largely discount retailer. So that's a little bit of a telling sign.
Yeah, so that reflects the pressure on the pockets of the consumers because especially food inflation has been high while overall inflation has been coming off and the overall income levels like in terms of salary growth etc also has been muted in many of the industries. Job creation also is not as great. So I think there are various facets playing out which require monetary as well as fiscal intervention, which has been lacking. So I think those are the issues the economy will need to grapple with, at least for 1 or 2 quarters. On the other hand, the positive thing is that the monsoons were so good that agriculture production might be strong and the prices also are pretty good. So on the rural side, we could see some sort of recovery cycle combined with the kind of freebies also which are being given in terms of monthly payouts, etc., by several state governments. So I think at that level, there is a possibility we could see some recovery play out.
And I think, Sandeep, that all also boils down to what the RBI is going to do and what the MPC will decide now that US has already moved on lowering rates.
Yeah, so the MPC has been very conservative in my view because they have not recognized the fall in core inflation as well as so at one level people argue that the reason they did not reduce because if until the US reduces there could be pressure coming on the Indian rupee. I think that scenario also is not there. If you look at India's forex reserves at the fourth largest in the world, it grew by $12 billion just last week and at $705 billion. I think the forex reserves are very substantial and comfortable, even if we remove the foreign exchange borrowings by corporates, etc. So they need to act to start supporting the economy. But the consensus is that, again, they will do nothing in this meeting.
Sandeep, stay with us. In fact, let's hear at Mark Mobius. He's pretty bullish and he says that, money moving into China and EM funds would also mean money getting deployed to India. In fact, he's got a pretty lofty nifty target, that of 50,000 by next year.
China, of course, has outperformed dramatically in the last few weeks, but we'll probably reach a turning point soon because it's moved up too far, too fast. So we'll probably see a correction. But India will continue its upward rise with some corrections along the way.
Mark, you've always been a long-term India bull. We've corrected just a wee bit from the top. We're still at 25,000 in the Nifty. But what are the targets that you're looking at before the year ends?
Probably 50 or more. Who knows? Not before the year end, but by next year.
All right, interesting take coming in from Mark Mobius. Meantime, let's get in a take from you then, Naresh, just going by the kind of big drags that we saw on the frontline index purely on Friday's trading day. Of course, the week was pretty rough for sectors across the board.
For example, Reliance fell last week. Nothing new has come in Reliance, but the stock fell by what, 5% approximately. Similarly, if FIs are selling, then in the near term, banks which are supposed to make a comeback, will they take a backseat? That's question number one. Question number two, what happens to some of the stocks where FI recently have really lapped up in the IPO market? Let's say Bajaj Housing Finance, Ola Electric, Zomato. What happens to that, pool of stocks? Sandeep, so let's assume that the FI selling is real. And we're talking about cash market selling here, which means you're selling what you own. FIs typically own large cap stocks and some of these new tech and fintech names. They don't own a lot of PSU, they don't own a lot of defense, railways, etc. So if the selling continues, can we safely assume that stocks like Reliance, HDFC Bank, ITC, they would be on the receiving end?
It should happen because see, wherever the allocation is the greatest, that's why even if they sell proportionally, the sell-off will be more, and that's the reason why we see a bigger sell-off in large caps. Now, if global markets stabilize, then the impact of the sell-off could be more muted. But then we still need, as per my estimates, we still need at least another $5 to $10 billion of reallocation from India to China before the sort of parity returns and before the overall emerging market flows start benefiting India also. So that's something which should play out. Let's say whether it plays out or not, and if it does, then it could present some buying opportunities.
Okay, fair enough. Meantime,
Sandeep, which are some of the stocks which to your mind are, we've discussed this like Ahluwalia, we've discussed NCC, but that was last week. A lot of stocks have got damaged after that as well. Anything else which has come up on your screen which you would say, look, I wanted to buy it, but price stopped me from buying it. Now I'm getting it. It's almost the initial part of a Flipkart sale, where if you start planning right now, you will get good bargains.
Unfortunately, on the mid-cap side, the damage has not been as much as what's there on the large cap side. So right now, I think if this kind of correction plays out and FI sell-off plays out, there could be more interesting buys on large caps, in fact, than mid caps. But we are also at the verge of the start of the result season, so it's always prudent to see how the results also come out. So I would think better to wait and watch.
Apart from Ahluwalia and NCC, anything which is coming on your mind?
As a contrarian buy, we have been accumulating UPL over a period of time, and I think, but it's a work in progress. So we need to watch whether what they said in the last quarterly update actually is playing out or not. And to that extent, I think if things do play out the way the management has been indicating, then potential returns could be substantial. So I think this is one stock on the lookout.
we witnessed last week, and of course it was a monumental fall that we saw in the markets after quite a while that took place. And some of the big drags, of course, included your real estate stocks that were very badly hit. You had the realty index, which shaved off about 7.7%. Auto wasn't far behind with a 6% gash, and then you had most of your rate sensitives that succumbed to selling pressure. Reliance Industries, as we flagged off, was one of the key heavyweights that buckled under pressure. Shriram Finance was another big nifty loser. And then you had an Axis Bank along with Hero Moto that lost out. I'm just highlighting some of the big drags in the week gone by. And then BPCL. Sandeep, just going by what the outlook is on where crude oil prices are headed, how are you looking at the crude sensitives shaping up?
So I think again, because the geopolitical issues are so unclear, it's very tough to make a call on where oil prices will go. Because on pure demand supply, oil prices should remain subdued. But on the other hand, if there is some damage to Iranian oil export facilities, etc., then that could just change the picture entirely. So again, it's very tough to take a call on rate sensitive at this stage. But many stocks which are falling because of potential increase in crude oil prices, if that doesn't play out, then there we could see opportunities come up. But as of now, we have to wait because we don't know what could happen tomorrow.
So October, Sandeep, are we in for comeback? Are we in for more pain in small and mid cap stocks? Are we in for result reaction on the positive side? Are we in for festival surprise? What would be the underlying theme? For example, first part of September, it was a Fed rate cut. Second part of September was money moving into China. What could be that underlying theme for the month of October?
So again, I think there's money moving out of China, some corrective moves coming in the markets as the markets adjust to higher valuation and slowing growth. And in India, the additional challenge is because the MPC meeting is there, and again, if they maintain their sort of hawkish stance, so that could be another negative factor. So October overall should be a corrective move, and I think corrective moves are not bad. So if the correction does played out decently, then it could form a base for the markets to stabilize and then again move higher.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.